Options versus futures. This is a very discussed topic. Today we're going to be covering which one makes more sense for the kind of trader you are. Of course, you most likely saw traders doing live streams like this Korean guy here, for example, opening long or short positions, leveraged to the extreme, making huge profits with futures. And of course, you most likely heard about Wall Street bets. Do you remember back into the GameStop and AMC era when everyone was doing the short squeeze to profit from these options? So you do know that we have two very profitable strategies from both sides, but we do have to take in consideration a few things, especially if you are a beginner or an advanced user. So this video is going to be exactly for this. We're going to be breaking down similarities and differences between futures and options. And at the end of the day, we're going to give you our own opinion on which one should you start with if you are a beginner. So let's get into it. Futures and options, they both fall in the category of derivatives. Well, derivatives, as the name implies, they're products that derive from the underlying asset. So you have stocks, and then you get products that are derived from these stocks, like futures, like options. So this is what a derivative is, and it is used for a multitude of different things. You can use it to hedge, you can use it to speculate, you can use it to leverage your position. So all of these three are things that they have in common between futures and options. They both have their advantages. This is even more true if you compare them to just holding the asset. As we mentioned, when you're holding the asset, you're not able to hedge, your speculation is not leveraged, so everything you do is just holding and waiting for the asset to go up. But with options and futures, you can protect your assets if you believe there's a crisis coming. You can protect yourself by hedging. Or if you don't even hold the underlying asset, but you believe it will go down for some big news, well, you can open a position that is going to be short position to profit from the underlying asset going down. Both options and futures, they are contracts. So what are these contracts? For options, it is a contract that gives the buyer the option but not the obligation to buy if it is a call or to sell if it is a put the underlying asset at a specified price. So it is a contract between party A and party B for a future price of this underlying asset. The same thing applies for futures. But for futures, it is an obligation from both parties. Both parties are obliged to buy or to sell the underlying asset. This is a little difference between futures and options. For options though, we have limited risk. This is different from futures. Why is the risk limited? Everyone says that options are way harder to understand than futures, but when you start breaking it down, you see that there's just way more variables that makes it way more predictable to know what you're going to lose, what you're going to make, which is different from futures itself. Futures is you just know you most likely are going to be leveraged. You just know that you open a position X, you have your liquidation price that can fluctuate. But for option, no. Once you open it, you know the maximum risk and you know the maximum profit that you're going to make. And if you are a buyer, for example, if you're just buying an option, you don't even need to exercise the option if it is not in your favor. So you as a buyer of an option, you are very, very flexible. This does not happen for futures because at the end of the day, both parties are equally obliged to fulfill the contract. So this is another major difference. What about investment cost and capital efficiency? Well, again, we have to give props to options here because unless you're leveraging your futures positions, you're going to be looking at a huge capital to begin with. But with options, they are already leveraged. We're going to get into intrinsic and extrinsic value in another video, but they are already a leveraged product once you get to understand how it works. So there is for sure a lower investment needed to start from a buyer perspective, or also from selling options or selling credit spreads or buying credit spreads or doing these income product strategies. So this is something that goes again in favor of options. Flexibility. Well, again, I'll have to give it to options. Once you get a little bit more familiarized with how options work, you understand that they give you huge advantages on top of market conditions. And this does not apply to any other derivatives, I have to say, because at the end of the day, with futures, you can do two things. You can open a long or a short position. So you can bet on the upside or on the downside of the underlying asset. But not with options, because with options, you can get advanced strategies. You can get iron condors, butterflies, all these strategies that allow you to profit from a sideways market. So let's say 1.5 years ago, 1 year ago, when the market was sideways, IV was very, very low, both for Ethereum and Bitcoin. No one thought the market was going to do anything. Well, that was the place for you to trade sideways strategies. And you can do that with options, but you cannot do that with futures. You have to wait for a pattern to show up, for a confirmation that something's going to go up or down, something is going to grow in an IV, it's going to have a huge spike upwards or downwards. Then you can open a position to profit from that movement. But with options, you can profit from no movement at all. So that's something that we have to give a point to options as well. Now we have to talk about time decay. Time decay is something that I have to give the point to futures. Again, futures do also have an expiration. In a few cases, for crypto at least, you can hold the position for as long as you want, but the funding rate will increase exponentially. So there is no time decay, but there is an increase into price, the premium that you pay to keep the position open throughout the span of the lifetime of the position. For options instead, there is time decay. So the point will go to futures. But there's a catch. If you are a seller, actually, time decay is your friend. Time decay affects the value itself, the premium of the option. So an option, the closer it gets to expiration, it will decrease in premium, or decrease the price itself of the option, because time decay is eating away the price of the options. But if you were a seller, this is actually a good thing. So time decay can be your friend in options if you know how to use them. So even though we gave the point to futures, because there is technically no time decay there, with options, if you are a smart trader, you can actually make time decay a huge asset in your option strategy. Let's talk about leverage. Well, options and futures, they can both be leverage, as we said before. But with options, again, you have a predetermined maximum loss. I'm going to show that to you right now. And with futures, you do have a predetermined maximum loss, but that can fluctuate. If you look, for example, at these big protocols that allow you to go 100x, 50x, 200x, whatever it is, you see that you have a liquidation price, and that liquidation price can go up and down according to a multitude of variables. So again, you don't have a specific number. You don't know specifically how much you can lose or how much you can make. So your maximum loss is also leverage. That does not apply for options. Your maximum loss is just the premium that you pay to open the position, to buy the call, to buy the put, whatever you're going to do. I can actually show this because I opened a few options here for you to take a look at. We're here in Bitopics in the income products tab. And if you scroll down right here, you can see that I opened two positions, and let's go through them together. So I opened a bullish and a bearish position. I opened the above $65,000 and the below $70,000. So I kind of created a condor here, limiting the range of Bitcoin. The strategy that I went to is that I believed Bitcoin would stay by Friday between 65 and 70,000. So far, the 70,000 one does not look good to me, because you can look up here and see that Bitcoin is over 70,000. So this position here, if today was the expiration date, I would lose that position. So how much would I lose? Well, you don't have to do hard maths. It is shown right here. This is the below 70K right here. And you can see I opened a 0.1 size contract. As we saw in the last video, you can open fractions of contracts here on Bitopics. This makes sure you can use a smaller fraction of capital, smaller amount of capital to speculate or to trade. You don't need to have a whole Bitcoin or the value of a whole Bitcoin to trade options here. So what would be my maximum loss? Well, my maximum loss here would be $177. Again, I do believe that Bitcoin could end up below 70K. I'm just going to hold this, and by next video, we should see what is the outcome of these options. So you can see I already have my max profit and my max loss set. This is a 10% ROI if the option goes in my favor, and for the other one it is a little bit higher because the max loss was 140 and the max profit was 48. So for sure this 65,000 here looks like I'm gonna have a profit here, not so much for the 70K, but so far we'll keep looking here. I could still get lucky and have Bitcoin closing by the 29 below the 70K mark. So this would mean that both my options will be profitable. Again, you can see that right now these options, one offers 2% max profit, the other one offers 58% max profit. So let's say you put $100 on each one of these. This one will give you $2 in return, and this one would give you $58 in return. So the conclusion of this video is, even though options have a huge versatility for whatever kind of market you're currently on, they can be challenging, they can be complex. And this is where Bitopics is trying to strive. We're trying to create products as the current income product that we have, where users can simply, with just a few clicks, enter positions that would be considered advanced. Our goal is to make all these more advanced strategies easier to do and with just a few clicks. So the user can just experience a great UI and just have access to all of these strategies that otherwise would require him a lot of time invested to learn options, to learn advanced strategies with multiple legs and all these sorts of Greeks, numbers that could be complicated, could be complex for a lot of users. So this is the main goal that Bitopics is trying to achieve. We're trying to simplify options for everyone. So this could sound a little bit biased from my side, but if you click here on this channel, on the live tab section, you can see that throughout the months that we've been covering options here, I started my crypto options portfolio at $400. And in a span of 6 to 7 months, we got to an all-time high of $2,000. So we 5x'd our portfolio. And this is not with risky strategies. We're just selling calls and selling puts to make a premium. Of course, at the time, IV was all over the place. We were getting juicy premiums on all the positions that we opened. That wasn't the case at the end of the challenge itself. You could see that after the all-time high, we kind of got lower with the size of the portfolio, mainly because of I thought and everyone else thought that IV was gonna go even higher, and IV just started lowering down. So we got IV crushed in one of our positions and the portfolio got a little bit smaller. But you can see the versatility in options to grow your portfolio, to grow your capital in a very efficient and fast way. Of course, this is not promising 1,000%, 3,000% returns, especially on these income products. But if you are just a degen trying to speculate on buying calls or buying puts, you can for sure achieve these numbers. So feel free to join Bitopics with a link in the description and test it out. Test these simple options or test the income products and let us know what you think. But also comment down below if you are more favorable towards futures or towards options. This is a place where we can grow, we can talk together. So feel free to jump in the comments and I'll see you down there as well. As always, thank you for watching and I'll catch you guys in the next one. Peace.